Welcome to our final panel of the day, the multi-chain future, building a net positive industry. And sitting on the panel today, we have a fantastic roster of guests, and maybe we can just start off with each of you giving a brief introduction. Austin, maybe if you'd like to go first.
At the Solana Foundation.
Or,
oh, there we go. Go ahead, Christian.
Yeah, happy to go next. So Christian Stoll from CCRI team. So I co-founded CCRI based on research which I conducted at MIT and at TUM, where I'm still a research affiliate, and I have a couple of other heads in the industry.
Yeah, sure. So I just joined the Climate Collective, which is basically trying to enable nature-backed currencies by bringing more natural capital on chain. I have a background in climate tech as a corporate guy, as a startup founder, and as a VC. And so I'm very excited to be here. Thank you.
Thanks. And Mark as well.
Yeah, certainly. My name is Mark Johnson. I'm an environmental solutions architect for Filecoin Green. For those of you that don't know, Filecoin Green is a Protocol Labs initiative to, one, make Filecoin verifiably sustainable, but two, to also build the world's best tools to measure and reduce environmental impacts. And I'm very excited to be here as well.
I appreciate the brief introductions. That lets us kind of delve into the deep matters of the topic. So we're going to kind of cover a lot today, but hopefully we can start to discuss cooperation between chains and how we reach that point. So the first thing I'd like to say is, now blockchain is infamous for piggybacking on trending topics, with ReFi being one of the most recent moves in the space. In my mind, this is one place we need to avoid the explosion or piggybacking that is so native to the blockchain industry, wherein something trends and many seek to leverage the opportunity separately, resulting in dilution of potential. This also makes any conversation around standards very difficult, around best practices, which is something that has to be discussed if we are to integrate with existing markets, which was mentioned earlier in our enterprise talks. So how do you think we can approach a cooperative environment that works to bring in all interested parties and avoid separation into various groups, attempting to solve for the same challenge, potentially limiting our ability to make meaningful change? Maybe, Mark, you can go first.
Yeah, certainly. There's a lot to unpack here. This is a great question. And when thinking about this, my mind immediately goes to Kevin Iwaki's talk, actually, from last year's ETHCC, when he talked about coordination and coordination failures and the limits of Dunbar's number, if you're familiar with that. There's a very famous meme that came out of that talk in which it's two astronauts looking down on the Earth, and one says, "Oh, so it's all about coordination," and the other one is saying, "Yes, of course, it's always been about coordination." And I really think that it goes straight to the heart of your question there, right? In order to minimize and mitigate that piggybacking and that dilution of efforts, we really need to focus on coordination across, even within specific chains and their ecosystems, but obviously across all chains. Now, when you talk about standards and technical specs and methodologies and schemas, especially here in the nascent environmental Web3 space, I really could not agree with you more that it is desperately needed that we coordinate to the utmost degree, especially if we want to keep track of the evolution of the carbon markets that is currently, spilling over into the Web3 space. And there's been a ton of measurable impact made by bringing in these existing market instruments into Web3, but we also need to be cognizant and recognize that there is the potential to port over some existing market failures from Web2 systems into Web3. And we really need to focus on ensuring that we don't necessarily allow those failures to continue to perpetrate throughout the Web3 ecosystem. And just lastly, I want to highlight that I really think that when we talk about piggybacking, the dilution of efforts, we should also recognize that not everything needs to be on-chain. There seems to be a maximalist conversation that's fairly pervasive across many chains that we need to have everything on-chain. And I very much agree with Evan McMillan, the CEO of Disco, a data packback, if you will. They're doing some amazing things with DIDs and VCs. And, she talks about how there's this fetishization of on-chain data, and especially when it comes to environmental standards and methodologies and criteria that constitute rigorous environmental impact, we should recognize that not all information needs to be on-chain. There is a certain amount of information that can be attested to and collected off-chain and then just settled on-chain in various transactions.
Thanks for that, Mark. Maybe Icarus, you could go next.
Yeah, happy to. So I think maybe building on what Mark said, I think it is very important to have different views represented. So one thing is like to bringing basically the legacy system on chain, right? And to build the bridges for them to interact with the chain. But the other thing is not to copy all the mistakes and errors that we have in the legacy systems. And so also thinking from first principles, how can we really redesign and like avoid skeuomorphism and just like mirroring everything we did previously on chain, right? And so I do think that there's a great benefit in like having a multitude of solutions in the very beginning, but then have a very tight mesh of connections and interactions, communication between the different projects to really reap the benefits and also the synergies and not to, have too much dilution. But I'm fine, like if we have in the beginning, for example, talking about carbon marketplaces, I'm fine if we have like 30 carbon marketplaces out there right now. I'm fine if we have maybe 10 competing standards for forward carbon markets, for forward carbon credits right now. But like what I want to do and what I think what is very important is to foster the communication between these different approaches, between these different projects, and then merge very quickly to like 2 or 3, maybe one side with bridging the legacy world and one side really thinking from first principles and making it more permissionless. And so I think it's good to have like this, to allow this Cambrian explosion in the beginning, but then really foster the communication between the projects.
Thanks for that, Icarus. We should definitely come back to that, but I'm going to let everyone else kind of give their perspective. But I'd love to hear everyone else's opinions on what you just said there as well. Maybe Austin, I'd like to hear about what.
Yeah, certainly. So, one of the interesting things when we talk about carbon markets, when we talk about sustainability and blockchain, is what are we measuring and what are we optimizing for? So one of the difficulties with any of this is it's a classic Oracle problem where you either have an authority system off chain that has to verify something that exists on chain. As we deal with anything in a regulatory environment, different types of carbon credits are valid in different jurisdictions, and there's a massive data matching problem involved in this. And the idea of permissionless credits is something that the off-chain world hasn't solved, and it's not necessarily a solution blockchain has any special technology to lend itself to, because again, it's an Oracle problem with verifying off-chain data on-chain. The biggest thing I think that the industry is probably doing wrong, quite frankly, in this space is we're looking at adopting existing technologies and basically cloning the offset market that exists off-chain, either on-chain, or blockchains are going out and they're purchasing carbon offset credits. And offset credits are a fine start. I think they're basically the boilerplate that every chain should hold themselves to, is to at least neutralize their carbon load. But it's really just the beginning, right? If you think about the entire principle of blockchain technology, we invest in this foundational work so that we can have outsized returns in the future. Whether that's a financial system that's more inclusive and, cheaper access to capital, all these sorts of things, they're all based on this idea of exponential return. And so far, most of the approaches that have been taken to sustainability, either on-chain or off-chain, are not really accessing that same sort of zeitgeist that's made crypto so successful. So, we at the Solana Foundation, yes, we've purchased offsets to make the chain carbon neutral for last year and this year. That's sort of the boilerplate, like base level entry that really everyone should be thinking about doing. The next step is to look at things like the Stripe Climate Fund and look at the stuff that Watershed is doing, which is specifically buying carbon offset credits at very high prices to enable the new technologies to exist. And that's really that first person who's willing to buy carbon sequestration at $1,000 a ton, which is, anywhere between 10 to 100 times what the price of carbon on the open market is. That has the ability to have an outsized effect, right? We are all in industries that are based on pushing the forefront of what's possible, and bringing that same ethos to sustainability, I think, is really the right way to approach this stuff.
Thanks, Ross. And yeah, I think you bring up a really interesting point, a very good one as well, when it comes to, and also voiced by other panelists here as well, about not kind of bringing the same problems to blockchain, and not just essentially reinventing the wheel with the same structure that existed in the off-chain world. Like, how do we innovate and create new solutions for these markets? And of course, blockchain lends itself into financial instruments and financial tooling that could be provided. And Icarus, we can talk about this after we give everyone a fair conversation here of the panelists, but discussing new monetary systems and how we can create nature-backed currencies, and thinking about the approach slightly differently. Before we do that, Christian, I would like to just hear your thoughts on the initial discussion here.
First of all, I always find it quite interesting that when the topic of blockchain and sustainability comes up, that carbon markets are in the center of the debate. So having worked on carbon trading and carbon markets before blockchain kind of came into the space, it's a difficult topic. It's international climate negotiations always collapsed over carbon trading for years. So I think last year in Glasgow was the first time that there was some form of agreement around Article 6, which is a form of carbon trading, and that the voluntary market was basically nowhere in terms of standards. And if you bring it now onto blockchain solutions, that you import some of these problems, at one side is obviously bad. At the other side, I see quite a lot of momentum now to create standards and get rid of those problems. So that's I would say quite a positive development. Looking forward, I find it, as mentioned, quite interesting that the blockchain sustainability debate is quite focused on carbon markets or voluntary carbon markets at that point in time, as there might be many other useful applications. Just thinking of carbon accounting, for instance, as the underlying tool. So if you don't get your carbon accounting right, you can have the best offsets and your claims are still wrong. So I guess in the next couple of years, we will see quite a few useful and really helpful applications that contribute to solving the larger climate problem.
Thanks for that, Christian. Maybe just going back to the first point, Mark, you made earlier on. You talked about how not everything needs to be on chain, and there's those maximalists that are thinking about it that way. In your opinion, about as structuring off chain, and where can we cooperate with that industry for the best impact?
Yeah, certainly. That's a great question. And before addressing that in full, I just want to double click on what Christian just said, because I also find it quite interesting that anytime you talk about those two topics, the majority of the audience tends to go straight to carbon markets and specifically the voluntary carbon markets. But I strongly believe that blockchain networks and crypto primitives have a really unique opportunity to drive collective action towards reducing emissions and showcasing industry-wide decarbonization in all types of ways, through, utilizing the tech for, say, enhanced supply chain traceability, to bring more transparency and more verification to how emissions, greenhouse gas accounting exercises are conducted, and a whole slew of other topics. But back to your point with regards to carbon markets and to standardization of this information and where it resides, whether on-chain or off-chain. When we started building out Filecoin Green, we quickly recognized that not only does the carbon market space with regard to offsets have a significant challenge of how fragmented the data is, but so does the renewable energy industry with their renewable energy certificates, RECs, which are a common type of market instrument used to match energy consumption to renewable energy production. And so we've been working very rigorously with a whole slew of stakeholders to identify and define a set of standards coming from existing legacy markets, and even building them in a more extensible way to take into account other metadata formats, and have been building out a more or less a set of standardized data schemas that can help with developing more transparent, more verifiable environmental assets of all forms, whether they be RECs, whether they be offsets, whether they be some other type of impact certificate. And of course, those are all, content addressed, stored on Filecoin and IPFS in more of an off-chain manner, and then can be referenced in other on-chain manners, such as, embedded in the base URI of a smart contract. So we think that that's a much more appropriate and rigorous approach to attesting to climate actions, rather than having everything on chain and having to account for all of the independent data points as they evolve through their life.
Thanks for that, Mark. Yeah, I'm sensing kind of a narrative to this conversation, which is an interesting one, but it's really around that carbon markets don't need to be the only focus, and there's a lot more to unpack here when it comes to blockchain as a solution with climate impact and social impact as well. So maybe we can start to unpack that a little bit, because Polygon is actually thinking about blockchain's impact as an opportunity. We have the potential to create equality. We can think about new monetary systems, tie them into ecosystem health with environmental assets. There's a lot of potential beyond just quelling carbon emissions. And, maybe Icarus, of course, with the Climate Collective, one of the things that's really a focus there is, and correct me if I'm wrong, but nature-backed currencies. And so, that's one of the other directions that we can kind of look at blockchain as a solution to climate impact. And maybe you can add some thoughts there.
Yeah, sure. I mean, the main idea of nature-backed currencies comes from the idea that when you back a dollar with gold, then people mine gold to exchange it for dollar, right? And so if you manage to back a currency, a monetary system by healthy natural ecosystems, then you encourage people to protect or even to regenerate natural healthy ecosystems. And so if a tokenized rainforest is worth more in like the value, because I can exchange it for money, then I can exchange only the timber which is on the land, right? Then this would encourage us to protect the rainforest and also to regenerate ecosystems that have been harmed in the past. And so right now, I mean, this all goes back to before even, but it was written down in like 2010 from Charles Eisenstein in Sacred Economics. Controversial book, I would say, in a lot of ways, and I have my problems with that. But anyway, like he was already writing at the time about this topic of nature-backed currencies. And so now the idea is to bring high-quality proxies for healthy ecosystems on chain. And one of them, or the first one that is on chain right now, is the carbon credit, right? And it's a carbon credit that is from the past. So right now we have carbon credits on chain that are vintage 2012, meaning the projects can be 10 years old, right? And so you can ask, like, how much additional is that really, right? If we put money into that kind of token. And so the idea is now to extend that, to look at forward financing, so upfront financing, to bridge financing gaps that are currently in the market. The other thing is to look beyond carbon, because carbon is just a very poor proxy for a healthy ecosystem, right? Because you can plant eucalyptus trees and they bind a lot of carbon, but that doesn't give you any of the ecological benefits other than that. And it's also very prone to burn down in the first extreme weather event. And so the idea is then to go beyond and to come up with biodiversity credits, for example. Or also use project-based token or land-based token where projects can be developed on further on, and where the price of that project right, or the price of the land right, will appreciate in time in value. And so that is the idea behind nature-backed currencies. And what we really want to see is we want to have more high-quality natural capital on chain. And so that requires the tokenization of these assets, but then more importantly, the MRV, so the measurement, reporting, and validation of these assets, basically to make sure that what you pay for is what you get.
Yeah, thanks for that, Icarus. I don't know if anyone else wants to add anything here before we kind of progress this conversation, but I'm going to open it up to the floor.
As you're looking at a lot of these systems, none of them necessarily require a blockchain to be viable. They require social consensus around what a society wants to value. And that's one thing that really as we go through a lot of these processes, like Ministry for the Future is sort of the modern book that has cemented the idea of like a carbon coin or giving people credits for that in like more of the public consciousness than you saw before. Highly recommended if you haven't read it. It's one of the Stan Kiwi Robinsons. But as we're looking at this stuff, the base level emission profiles of most blockchains today and most computer systems in general are just far too high. And, it's really awesome to look at alternatives like creating systems that'll make people value forests more. That work should definitely be done in parallel. But I think in general, we're not focusing enough on reducing the environmental footprint, not through offsets, but that base level calculation that you look at before you start the offset. Because the truth with offsets is offsets are great, but offsets are a form of transferring credits from one location to another. The net harm is still emitted, and reducing future emissions is not the same thing as preventing actual emissions to start with. I think one of the places that, if you look at scope 1, 2, and 3 emissions profiles for networks, you can come away with various conclusions about how ecologically friendly, a proof of work chain is versus a proof of stake chain. But the thing that most people are not including in that calculation is the data availability layer on top of that. I don't mean like L2s and rollups. I mean literally the indexers, right? If you look at the number of ETH nodes that are out there, the majority of them are not necessarily mining. They're serving data for customers like Ledger, or they're verifying your PFP on Twitter, or they're what OpenSea uses to interact with. There are all of these ancillary systems that are outside of the core mining and validation network. And just to kind of put this in perspective, this is not a blockchain problem. This is also a Web 2 problem. There was a report a few years ago about how Spotify's carbon emissions are actually higher than the global CD industry ever was at its peak. And so servers just take a lot of energy. And if they're not running on 100% renewable energy, we're still talking about a problem that is one that's going to persist even if we start bringing on better systems of carbon accounting, better ability to measure, better scope work. So it really is just about reducing the amount of energy we use and increasing the percentage of that comes from renewables. As it's like that, the whole thing about reduce, reuse, recycle, we skipped the first two and went straight to the third, and that's considered to be like the environmental solution. It would be really a shame to do the same thing when we're talking about carbon.
And Stefan, if I can just add in there, because what Austin just said was so incredibly spot on and resonated so strongly with me, right? Like, as he mentioned, the standard kind of go-to approach for decarbonization or for calculating your environmental impact is to quantify your footprint, then to reduce emissions wherever possible within your operational boundaries and within your supply chain partners' operational boundaries. And then if there are any emissions unaccounted for that have not been covered by those mitigation activities, then you should seek to procure high quality offsets to fill that little last missing gap. However, more times than not, corporations and individual consumers skip that middle and utterly crucial step. And they just resort to conducting a hand-wavy carbon accounting exercise and then procuring a lot of low-cost offsets to match to that. And with low cost generally comes low quality. Therefore, those offsets don't actually mitigate as many emissions as they state they are, right? But if you don't spend the time and the effort to doing a very rigorous greenhouse gas accounting exercise at the beginning, you have no understanding of what your baseline is that you need to reduce from, and you have no understanding of what the mitigation actions are that you could do to mitigate the emissions rather than just seeking to procure offsets.
Yeah, thanks for that, Mark. I mean, maybe Christian, you can add to this with CCRI, of course, that being a focus of your expertise, adding to how blockchains can begin to integrate those three steps that Mark just outlined there.
Yeah, so happy to comment on that, and also echoing what Mark said to some extent. First, you need transparency, because if you have no transparency about your emissions, you can't manage them. So therefore, you need proper data. You need clarity on what you emit. Also, related to Austin's point, you need to have clarity of what's your base electricity consumption or energy consumption in other industries to start with. Then you can conceive of strategies to reduce that, which should be the second part. And I think, Mark, you mentioned the RECs, which have certain issues because I guess everyone familiar with the GHG protocol knows that there's quite a lot of double counting, and the GHG protocol itself has kind of identified this as an issue. And a recent paper in Nature Climate Change, I think, highlighted that there's a huge deviation between corporate pledges and what actually lands in the atmosphere in terms of emission reductions if you go via RECs for your scope 2. And also echoing, offsets should then be your last resort. So offsets are definitely better than doing nothing. But when we talk about offsets, I think this is a larger discussion. We have to think about the quality of the offsets, about matching time frames, as highlighted by, I think Austin mentioned the legacy credits that are flying around. So that's then the last step in this issue. And we from the CCRI side have focused on providing clarity, data clarity, so that chains know what is happening, also on layer 2 networks or others that build on top of energy intensive protocols, which is also kind of an important thing to do, so that you're not just looking at what your own servers do, but what you cause along your value chain. So that's kind of where the CCRI team is kind of providing most or has the largest contribution to this problem.
Thanks for that, Christian.
Let me just jump in and make a contrarian point at this point, just because I feel like when we talk about like the global cloud computing, which blockchain is then a subset of, right? The global cloud computing emissions, we're talking around 2.5%, 3%, something like that right now of the global emissions, right? And so blockchain can be only a small subset of that at the current state. If we tokenize everything, then it will become a bigger subset of that, of course. And so I guess for me, it is very important just to state that, like, of course, we have to clean our own backyard. That is very, very important. And of course, it starts with reducing before offsetting. But like the chance that we have to redesign our monetary system is so much bigger because it encompasses everything, basically, right? And so we're talking about 100% of the emissions that we can redesign with the new monetary system that we're building. And so I do think that this is the biggest goal that we can aim for. And I do think that definitely these steps have to be done before, or in parallel probably, but nevertheless wanted just to point out that I think like redesigning the monetary system is so far more important than like reducing emissions for the current on-chain emissions. And like, I think that this whole blockchain emissions discussion would not have happened if it was not for proof of work. I don't think nobody would ever talk about like the blockchain emissions if we didn't have proof of work before we have now proof of stake. And so I think it's more of something that just happened out of history rather than because it makes sense to put this in the focus right now.
Yeah. So fully agree. If I may directly respond to that point, emissions from blockchain are minor. And as you said, we're talking about a couple of percentages. Now we can debate which share of data center emissions is related to blockchain technology, and estimates vary greatly depending on whom you ask. And also agree that we need to kind of solve the larger problem. However, of which blockchain may also kind of play part of the solution. So if you I guess everyone would agree that the Paris Agreement is the ultimate goal to reach, which defines you a certain amount of carbon that you have in concentration that you can get in the atmosphere. So if you now have a carbon accounting system in place that cascades down those targets on a national level, which you can verify, potentially with a blockchain solution, which you can break down on industries, on sectors along the value chain, and you can verify and have transparency and data access, then this tiny piece is not a problem, but part of the solution. So that's I guess also an angle to highlight in this context.
Sure. I guess I would also say though that the only way you make a rocket 10 kilograms lighter is you take 0.5 gram off every screw. And so like when we're talking about like globally interconnected systems, like the only way this works, like there's no magic bullet when it comes to climate change. It's every sector increasing 10, 15, 20%. And so, yeah, it's not necessarily the most important thing for us to focus on, but at most there's 20 million daily active users of blockchain. Like at most, I think most estimates are much smaller, somewhere around 10 million. If we scale that up to meet even 500 million people, the emissions profiles are going to track at least linear, potentially non-linear for this. So I think that's really kind of when we start looking at this stuff, that is something to keep in mind, is that the same way that you want to build your software architecture on a good framework that's going to be able to meet future expected demand, you've got to build your climate plan with the expectation that we are going to someday succeed. And the majority of the world's infrastructure, or at least a significant portion of it, is going to be in some way powered by blockchain technology.
That's fantastic, Austin. And I guess just to round us out here, add my own 2 cents as well, because I agree with pretty much everything everybody said here. I agree that we cannot, discredit or downplay the amount of emissions that are being generated from the Web3 space, even if it is small. But given the anticipated continuous growth of the entire sector, of the entire industry, we need to keep that in check. We need to do what we can to mitigate and minimize the emissions that are being generated here. But also, Christian, as you mentioned, I strongly believe that blockchain and Web3 tech has an unbelievable opportunity to be leveraged and utilized to enhance transparency and verifiability of carbon accounting and supply chain traceability across legacy industries, right? If you take the entire Web3 space right now, every single chain, and you compare it to, say, the global steel supply chain, or lithium or aluminum or cobalt, or you name it, fundamental physical commodity that makes up the fabric of the global economy, it is minuscule compared to it, right? But blockchain networks and crypto primitives have a really unique opportunity to drive collective action towards reducing emissions, showcasing industry-wide decarbonization, and really, creating new demand for clean technologies. And I think in doing so, the industry can become an important player in the renewable energy space and can help drive objective, actionable change towards environmental sustainability.
Thanks for that, everyone. Yeah, definitely echoing a lot of what was said there. Just kind of coming back to that, of course, Austin, we need to be conscious of what the potential implications of our own industry is moving forward. But something that stuck with me from one of the conversations earlier, it was a quote that was, "Don't let perfect halt doing good." And of course, blockchain has the potential to really drive a lot of impact. And yes, we do have this footprint that goes along with that. And we need to be conscious and move towards a situation where we can minimize that. But in the meantime, let's focus on using this as a solution and build. So when it comes to that, I'd like to kind of hear a discussion from everyone here, but how do you think we can cooperate together to start to integrate external industries? How can we support capital influx from other spaces and get buyers involved so that we can expand this industry and potentially expand the impact that we're having? If anyone wants to kind of jump in here first, feel free.
Well, hearing none other, I'd be happy to kick us off here. I think it's an absolutely crucial question that you're raising here. We need to gain the perspective and the insights and the experience from actors in other industries, especially some of these, high emitting or emissions intensive, hard to abate physical commodity sectors that, as I mentioned earlier, that, make up the fabric of the world. If we are to make any type of meaningful and measurable impact on really achieving some of the long-term goals as stated in the Paris Agreement, like Christian mentioned earlier, then we need to work across all sectors of the global economy, not just our own, but we need to focus on several areas of economic activity and try to minimize and mitigate emissions from those sectors at a scale and a speed that has never been achieved before. But also within our own sector, within the Web3 space, we need to seek the guidance and understand the perspectives of those that are in the climate science space, right? I think that there's a lot to be said about gaining their understandings of how we can minimize and mitigate the emissions from this computer industry. And for our part, specifically with Filecoin Green, one of the ways that we're doing that is by hosting a reoccurring event that we've coined the Sustainable Blockchain Summit. It's happening here in Paris in about 10 days time. Or maybe, no, actually about 7 days time, July 22nd and 23rd, right after ETHCC. And really the goal is to bring together a community of people, some of which are here on this call with us, to work towards stronger verifiable sustainability claims within crypto, but also to build the Web3 infrastructure that will help us accelerate decarbonization in the broader economy. So if anybody here or anybody listening is interested in that, just go to sbs.tech, go to that in your browser and please sign up. We would absolutely love to see you there.
Yeah. So one of the things I would love to see is that more blockchain foundations start committing to doing more than just do offsets. Most foundations have plenty of money, right? That's not usually the limiting factor of what a foundation is able to do. It's usually more of human time and, opportunity and those sorts of things. It's not a capital outlay problem. So I would love to see, a lot of chains have done purchasing of offsets. Solana Foundation has done purchasing of offsets for our 3,000 tons of CO2 emitted last year. You should take those dollars, you should double them, and you should put that money towards Watershed or the Stripe Climate Fund, right? One of the mistakes that I think a lot of people make in crypto is thinking that we know better than other people. And sometimes it's true in finance, and sometimes that's not true when it comes to things like the environment. And the existing industry is very focused around checking a corporate box. And it's good that social pressure has made that corporate box be something that Microsoft and other big tech companies have to check, that says like, yes, we have a plan to get to carbon neutrality, or yes, we have purchased offsets. But again, because our communities are way more willing to embrace new and future technologies, don't put that money into proven tech. Put that money into tech that is not proven. Put that money into tech that probably won't work. But if 10% of it works, we're starting to actually think about how much of a difference it would have made to put another $30 million into solar in the 80s. That's a situation where we may have accelerated that massive cost curve reduction by 10 years if that money had been available in the early days. There are technologies out there nowadays. I don't claim to know what they are, but the folks who run Stripe Climate Fund do a very good job of finding them, and Watershed do a very good job of finding them. That you can start accelerating. And if just one of these things works, that money that you put in today may have 1,000x effect in 5 years just by proving the viability of a technology. So I'd love to see more blockchain foundations or organizations that are purchasing offsets keep doing the offsets, but put that same amount of capital into technologies that are not yet proven.
Yeah, Austin, I think you raise a really good point here, and coming back to what you're saying about, blockchain doesn't necessarily know best, and perhaps it's an industry that is somewhat insular in that respect and can kind of try to take on that mantle. But the funds you're mentioning, they are off-chain, and I think people think immediately that we need to work on solutions on-chain, which is not necessarily the answer. And I guess the way that I personally see it is blockchain is a tool set, right, where we can create transparency, we can drive funding towards building into these existing models. So, is there a way that we can come together as a community and support these initiatives that you're talking about when it comes to the examples you gave with Watershed and Stripe Fund to really drive that forward and accelerate the speed that they're going at? Earlier in the initial introduction speech, one of the things I mentioned is, blockchain is a tool to amplify, accelerate, and scale what's already happening inside the space, or outside of the space, sorry. And, I think that's maybe somewhere that we should touch on and try and figure out how we can cooperate to drive those industries forward and focus on the very small time window that we have to really put these new technologies into practice.
Maybe to add one thought here. So there's definitely a great opportunity for the blockchain industry to lead by example. So a lot of chains already are much more transparent in terms of climate impacts and are much more ambitious in terms of financing climate projects than many other industries are, traditional industries are. So I would hope for the future that there's kind of a more cooperated approach towards disclosure of climate impacts and also into climate action. And that's one thing that we try to contribute from the CCRI team by kind of building a comparable database so that at least there's one source of truth for emission data of the industry. And I could imagine that if the blockchain industry takes the problem seriously or sees it as an opportunity to lead by example, then this can be quite beneficial.
Thanks for that, Christian. Just kind of touching a little bit Sorry, Mark, did you want to jump in here and add to that?
No. I think you said it perfectly fine.
Great. Yeah, I mean, coming back to what you were saying, Mark, a little bit before, and staying on that narrative around getting external industries involved and supporting external industries, how do we start to think about, with SBS coming up, integrating the client experience and doing it in a way that does support the ethos of blockchain functions from a more decentralized approach? How can we integrate climate science in a way that is not necessarily selecting a board, and this board is the be all and end all of how things need to function, and adding a gateway into what's right and wrong?
Yeah, certainly. I mean, this is a $1 trillion question. There's a lot to unpack here, of course. Once again, just kind of highlighting SBS and this remarkable opportunity we have. Once again, back in IRL, we are so excited to see so many people in life, in real life. And of course, we'll be following rigorous COVID protocols not to contribute to any sickness. But with regard to gaining the perspectives and the inputs of those external stakeholders or those climate scientists that may not be so closely related to our work on a day-to-day basis within the Web3 industry, very much believe that there's great hope in science for this, budding term of DeSci, and for DeSci communities to play a large and absolutely crucial role in providing, say, scientific rigor and strategic advice to a number of these conversations today, especially when with regards to the carbon credit space, right? They could provide opinions and the methodology pipeline or methodology development pipeline specifically to help us understand what constitutes a rigorous mitigation action in many different sectors or areas of mitigation potential. That being said, DeSci is an incredibly nascent nascent space, or it's in its infancy. So it will certainly take some time to mature, but I think having these conversations like the one that we're having right now, and having these virtual summits like Polygon is putting on, having events like SBS where we'll actually have some technical officers from the UNFCCC there in person, and people from the legacy carbon markets in person, and people from some energy policy think tanks, such as my old employer, RMI, the Rocky Mountain Institute. They're alongside all of these refi and solar punk people that are native to the Web3 space. All of them there together to explore and discuss these crucial topics, and to identify and define some of the unique challenges that we all face, and to try to align everybody on what some optimal solutions are, or at least some optimal steps forward for us to continue to make measurable impact throughout time.
Thanks for that, Mark. Yeah, just echoing what you were saying, I think one of the steps that you're implementing here, and I think it's being implemented at a wider scale with the industry, is kind of looking at ourselves as a child, right? We are creating a lot of innovation. We're coming up with great ideas because we are coming from like a green standpoint. We don't necessarily have all of the expertise that previously existed in the industry, but now we're at the point where we're ready to have a conversation with everyone else, and perhaps humble ourselves to say, look, we're ready to engage with you. How can we engage in a way where we can support each other and amplify everybody's impact? Which I think is kind of the next step that we're moving towards, and maybe that is where this is going. And with SBS being the next event, and then Polygon is of course planning a following event from this. So it would be great to start to develop some cohesion and continue this conversation on a wider scale with everyone here, and then of course the wider industry as well, and make sure that it's not happening in these insular pockets across the map. Of course, that's a really hard challenge to navigate, especially with the decentralized nature of the industry, right? People are creating other solutions. And Icarus, I know you mentioned, having different carbon markets is not necessarily a problem, but finding a way to navigate back down to something smaller. From everyone's opinion here, how do we start to approach that big challenge? Because we are seeing these pockets pop up in different areas, and there are some collaborative conversations, but how do we actually start to make sure that there is cohesion so that we can really support each other?
I don't think there's an easy answer to that.
That's why it's asked, right?
Yeah, exactly. I think, once again, reiterating something I mentioned just a moment ago, having these conversations, both here in a virtual setting, and in real life with events like SPS, and continuing to do them, having these events in a more regular basis and a more regular cadence really helps us elevate these issues and helps to drive some of that cohesion across some of these siloed conversations. I actually think the Web3 industry writ large is performing very well on addressing some of these crucial environmental challenges that we currently face, and I have great hope that we'll continue to overcome them in due time, just as the Web3 industry has basically overcome every challenge that it has faced since its genesis. And I think, once again, that we have this unique opportunity to address these challenges, to overcome them, and to showcase how our solutions that we've applied in Web3 can also be replicated and leveraged by other legacy industries to make transparent, substantive environmental claims and measurable impact in their own regards.
Thanks for that, Mark. We are just over time here and now, but I think there have been some key points highlighted here that really do present next steps a little more widely and give some visibility to that. So I really appreciate all the panelists joining us here for this event, and very much looking forward to the next event there in Paris in a week or so. And it's great to see that conversation developing and continuing. And I really do have faith for the industry helping to solve this massive challenge that we're all facing.
Certainly. It's been a pleasure. Thank you for having us.
Thank you.
Not enough time, guys. Thank you. Thank you, everyone, for joining us. Really appreciate everyone that's decided to listen into these panels, and also just wanted to say thank you to all of the panelists that have graced us with their presence. There were some fantastic conversations and some really interesting points that were made today that I think a lot of people will take away from, and who knows what innovations we'll see next. But also, I just wanted to say that there is more to come. As Mark mentioned, there's a SPS coming up, sps.tech, following a week from now, and Polygon continuing this conversation. We'll be expanding out what we're doing here and really elevating what's happening around sustainability and delivering a platform that allows us to bring the conversation to the forefront and showcase it as perhaps the most crucial topic that we need to solve for right now. So Polygon is keeping that conversation around blockchain and sustainability going as we begin to define best practices. And so, watch the Polygon space and look out for the next part of this interesting chapter. And we'll also be hosting some upcoming Twitter Spaces to kind of unpack what was discussed here today, because there's definitely a lot to explore further. But thank you everyone for joining us. Looking forward to the next conversation.